Hi, welcome to the weekly update. This week there are four updates. Let's begin with what's happening with the Indian bond markets. The Indian bond market yields have started to cool off. The 10-year GSEC yield is presently trading around 30 basis points lower over the last couple of weeks and is presently trading closer to around 7.10. This is post the pause in the interest rate hike by the Monetary Policy Committee. Much awaited to see whether the 10-year GSEC yield goes below 7% over the next 1 month. In US, there is a bit of good news which is around inflation. The US government reported that in March, consumer prices were up only just about 5% from the year earlier, the lowest reading since May 2021. In June 22, please recall, the inflation had peaked to around 9.1%. Thus, inflation has receded quite quickly. However, the bad news is that the core inflation remains more persistent in US. That is, when volatile energy and food prices are excluded, core prices were up 5.6% from a year earlier, slightly higher than the previous month. There is some positive news on the condition of the financial markets in US. Please note that the entire 2022, the tightening monetary policy by Federal Reserve with the intention of weakening credit markets in order to fight inflation had pushed up the risk rates across the financial markets, and indicators suggested worsening trend. Beginning October 22, things reversed till the Silicon Valley Bank failed in 2023. However, the successful intervention by the Federal Reserve and the US Treasury stabilized the banking sector and led to a quick decline in risk spreads to the pre-crisis level. And finally, there is a growing alarm amongst policymakers and economists about the increasing fragmentation of the global economy. This concern is based on the increase in protectionist actions by major economies, including the US, in recent years, and the implementation of industrial policies meant to boost domestic manufacturing in major markets, the restrictions imposed on technology exports to China and China's threats of retaliation, and the perception that these factors will lead to the creation of trading blocs rather than fully integrated global economy. The risk is that this fragmentation could reduce trade, reduce cross-border investment, lead to more inefficient supply chains, and reduce the sharing of information and ideas that generate innovation and boost productivity. On that note, signing off for this week. Speak to you same time next week. Till then, take care. Bye-bye.